The Federal Reserve is hitting the brakes. That's what we're going to talk about today. I will show you all of the details you need to know about what's happening with interest rates, what's happening with the balance sheet, and what it means to you. Let's begin right here. Several FOMC participants have suggested accelerating the taper timeline. Can you believe it? We're just starting and already talking about this. I'm going to show you this chart right here, as well as a couple others that contain some data that I believe is really important because it's going to signal what happens next year and, of course, beyond that. This comes from Goldman Sachs, and they basically took quotes from 5 individuals in the FOMC that are very, very relevant. All right, now Daly, I'll just go through this as quick as I can, okay? This is all within the last several days. Daly said, if the labor market continues to improve and inflation remains strong, then those are the things that would say, looks like we need faster tapering. That's one. The next one, a faster taper would certainly give us more optionality as we move into 2022 and see sort of where the data takes us. That timing, finishing the taper in the first quarter, remember that, hold that thought, I would be comfortable with given the way that the data has come in recently. Interesting, isn't it? Sounds like a departure from what they were saying just a little while ago. Clarita said, I'll be looking closely at the data that we get from now and the December meeting, and it may well be appropriate that at that meeting to have a discussion about increasing the pace at which we're reducing our balance sheet. This to me is huge because we were seeing just a few months ago, they're never going to taper. It's never going to happen. The markets don't believe it. If they did, instantly the markets would crash on all of this. And yet they did their taper and markets didn't react in that way. I'm sure they don't want that to necessarily happen, but okay, no big deal. And so they did it at 15 billion. So let's look further here. Waller. If you double the pace of tapering in January, you could be done by the beginning of April. And that brings you policy space, should you need it. What are they saying? Oh, now we can increase our interest rates if we need to. I'm not saying that we have to, but if you get the taper done, you could have a rate hike as early as the second quarter. Now think about that. He's saying this is something that we could do. Now, why would you want to do that if the job situation is great, as they say? Unemployment continues to decline. Their projections are that it's going to go back to basically where it was at the beginning of 2020. And what's the point here? Price stability, employment, the dual mandate. Why are you worried? Why would you need to increase interest rates unless the information that you share with the public is different than that which you are looking at? And then Bullard, those quotes I covered in a recent video, saying largely the same thing. Let's move on to this. We now expect hikes in 3 hikes in 2022 versus our previous forecast of 2. Now, they haven't got anything right at all, but I just use their data just to give an idea. Now, this to me is interesting. November, December, $15 billion of tapering. All right. Now, some people, there was maybe 1 or 2 comments that said there is no tapering happening because it's all about what they can do. But you can look at the schedule, which I showed in a previous video. I highlighted everything they did with the taper in one particular video. And it shows you the schedule, and you can total up those amounts, and it tells you exactly what they're going to do. Okay? And then you could compare that to what they've actually done. And usually, for the most part, it's accurate. So January and beyond, the expectation here is that this would be 30 billion a month. So then at the March meeting, they would, and of course, each meeting they have to reassess the situation. But they would potentially be looking down the road that, you get it always in advance. They always put forward guidance out there, and they always say, we are considering increasing interest rates should we see this or that. And they want to get the market's reaction to it. They want to get businesses' reaction to it, and so on. Then you look here, the June FOMC meeting. We expect rate hikes in June, September, December. So that would be 3 in 2022. Now, this is a big departure from what we saw before, because if you remember, it wouldn't be until 2024 that we would see a rate hike. You remember that? Wasn't that long ago? When everything was happening in 2020, they said, we're dropping these interest rates down all the way to the bottom and we're not lifting them up. We are going to print money like there is no tomorrow. We're not going to stop. And the dot plot revealed, okay, where the expectations of the members of the Federal Reserve suggested that there would be no rate hikes at all in 2022, no rate hikes at all in 2023. And so that suggests, well, it's going to be 2024. But now they're talking about the potential for actually increasing them just a few months down the road. So let's see what happens. Nobody really knows. And people would say, just like the taper, oh, no, it's not going to happen. Well, of course, we don't know until it does, but the taper did happen. Here you can see we now expect the FOMC to deliver the first hike at its June meeting. I thought this was interesting. The unemployment rate, by the time that June meeting comes around, 3.7%. 3.7%, and the 2019 average, 3.7%. I mean, it's crazy, isn't it? And in fact, the U6 unemployment rate would be lower than the 2019 average. I mean, I don't know. I don't believe any of their rates anyway, but this is what they're saying. So you can see here just the core PCE and so on. They do believe with the core PCE and the core CPI that there would be a general decline, okay, over those coming months. A general decline. We'll see if that is actually the case. Because they said, if you remember the way this worked, they said, yes, it's going to increase. We're going to have a few months of high inflation, but it will start to kind of just slowly work itself down. And that's it. That was the expectation. Every financial analyst, every major financial company, official statements, government officials, Federal Reserve, other central banks, all basically had this model. Increasing, there's going to be a spike, it's going to be a problem, and then it's going to start to come down after. And that didn't happen. Do you agree with me? If you do, hit that thumbs up button. Is this what they said? Let me know. Let me know in the comments below, because I'm following this day to day. And if you've been watching these videos, you know where I am at. You understand all of this. It all interconnects. And when people start to realize that this is a scam and a fraud that they're pulling over us, we can start to ask the right questions and say, you know what? I'm tired of this. I'm going to go my own way. I'm going to do my own things. I'm going to invest the way I want to. I'm going to grow a garden because I can see food prices rising and the shortages and so on, and I want to be prepared. And I want to look at this, and that. All of these different things. But we have to look a little deeper. We have to know and desire the truth. So that's why I appreciate you being here today. All right, last but not least, CATHIE Wood. CATHIE Wood, my goodness, all right? I just think it's so relevant. And she basically says, despite the fact that her funds seeing massive outflows, her funds are underperforming in many different ways. I think I read a stat of underperforming the NASDAQ by 40% or something like this. But regardless, she says that she's really concerned that her investors may be heading straight for the exits on the downward momentum, saying you should be buying the dip, not selling the dip. Well, not necessarily, a good situation for CATHIE Wood, for her investments, and for the investors. We will see. We will see what happens. What do you think? Do you think that ARK will be floating after all of this, or will it be sinking to the bottom of the ocean? I want to know what you think. Of course, as always, if you want to support the channel, hit that like button. It's right down there. Just click that one button, and that's it. I will see you on the next one.